The extension of the emergency restrictions was followed by the allocation of trillions of rupiah for social assistance. The emergency restrictions are also feared to have an impact on a wave of layoffs, which will also contribute to Indonesia's economic growth. So for more clarity, let's dig deeper in these following infographics. Let's move to the first graphic. We can see the additional budget allocation for social assistance. The first category is Basic Foods Program, 7.5 trillion, Regional Government Assistance, 7.08 trillion, Rice Distribution, 3.58 trillion, Extension of Electricity Subsidy, 1.91 trillion rupiah, Pre-Employment Card Program, 10 trillion, Internet Quota Subsidy, 5.54 trillion rupiah. In total, 39.19 trillion rupiah. The data is taken from Ministry of Finance. This additional fund for social is aimed to ease the burden on affected communities, especially with the extension of the emergency restrictions until July 26th. In an official statement, President Joko Widodo stated that the government will also provide incentives for informal micro-enterprises, in which the budget prepared is 1.2 million rupiah for 1 million micro-enterprises. And for this reason, Jokowi has asked the relevant ministers to immediately distribute social protection, of course, right on target, and is truly accepted by people in need. And not only having an impact on the allocation of additional social assistance, the extension of the emergency restrictions also brings the threat of a wave of layoffs, especially in one of the affected sectors, the retail sectors. And let's directly see the estimation on the next graphic. So retail sectors is one of the most affected sectors, while the threat of layoffs for shopping center workers is already estimated. The total employees of these sectors is 280,000, and not including tenant employees, and potential layoffs for shopping center workers is around 84,000 workers, or around 30% of total employees. This data is taken from Indonesian Shopping Center Management Association. And General Chairperson of the Indonesian Shopping Center Management Association, Alphonsus Wijaya, said that layoffs were the last policy option taken by the management. He explained that there are several stages before employees finally experience layoffs. First, employees are laid off with fixed wages paid in full. And second, employees are laid off with wages paid in part. And lastly, layoffs. And currently, most mall employees were laid off either with full or partial wages, depending on the capabilities of each mall owner. And according to Alphonsus, the condition of mall entrepreneurs this year is tougher than 2020 because their reserve funds have been depleted to maintain their business. And in relation to the potential wave of layoffs, the government said it had allocated funds to help the laid-off workers through the Pre-Employment Card Program. So how big is the allocation? Let's check the answer in the next graphic. So we can see in the third graphic the allocations for Pre-Employment Card Program. The initial allocation is 20 trillion rupiah for 5.6 million participants. And regarding the emergency restrictions, the government add the allocations by 10 trillion rupiah for more 2.8 million participants of Pre-Employment Card Program. And Finance Minister Sri Mulyani said the Pre-Employment Card Program was considered effective in helping people affected by layoffs. She explained that the government initially allocated a budget in the Pre-Employment Card of 20 trillion rupiah, which was given to 5.6 million participants. And with an additional budget of 10 trillion, the number of Pre-Employment Card participants can be increased by 2.8 million people. On the other hand, she said that the incentives for additional pre-employment quotas remain the same, namely training cost of 1 million rupiah per participant. Likewise, with the incentive fee of 600,000 per month. And moreover, the implementation of restrictions due to the high number of COVID-19 cases also has the potential to reduce Indonesia's economic growth rate. So how far does it go down? Let's check it out in the next graphic. So Fitch cut its projection on Indonesia's 2021 economic growth. The agency said that the Indonesia's economic growth on this year only 4.8%, or much lower than the previous projection at 5.3%. The main reason is the increased risk from the recent surge in COVID-19 cases and the cut or the trimmed projection on Indonesia economic growth pose risks to financial markets, both bank and non-bank. And Fitch hopes that the projected economic downturn will not decline further in the future. On the other hand, not only reducing the pace of the economy, Fitch sees that the impact of the spike in domestic COVID-19 cases can have an impact on other financial sector, where debtors will ask for an extension for loan restructuring to banks and non-banks. The goal is that they can delay the obligation to repay the loan principal and interest. And in fact, according to Fitch records, credit restructuring at 12 large banks has increased by 21.5% in the first quarter of 2021. This condition makes the ratio of non-performing loans also increase, swell to 3.1% in first quarter of 2021. And hopefully, viewers, the extension of emergency restrictions will be able to lower the daily case rate, and then the economic recovery of all aspects can be continued soon.